G'day mate, I just wanted to do a follow-up video on the videos we did, or the videos I did a couple of weeks ago. It's the 7th of October this morning, so we're only a couple of days away from the 9th, which is when we re-enter that green period that we had. And Bitcoin's pretty much been doing exactly as I sort of outlined a few weeks ago. There's a specific bear market formation that it's forming, and I just wanted to show you a few examples on the Dow Jones specifically. The two major bear markets we've had over the last 100 years. There's a specific kind of formation that takes place, and Bitcoin's just doing that exactly. So just wanted to quickly do it. It won't be a long video, it'll be really quick. So I don't know if you remember the video that I did last time. It was done on this day here. It was the 22nd of September, even though the upload date on YouTube was the 21st. I'm not sure why, but it was a Friday when I did it here. So at this point here, what I wanted to see was a rally into this next green period that's entering on the 9th. And I wanted it to get up to around this sort of head and shoulders area that I was telling you about from that last shoulder. I wanted to get up to there and also a little bit higher, possibly into that double top area just here. And we've already sort of failed that head and shoulder initially and had a little bit of a pullback. So people will be getting a little bit scared up here. But I do expect it as we enter that on the 9th, which will be on the Monday, as we get into that green period, I do expect it to go a little bit past this and do like a false break, so it sort of gets a little bit higher, and then you start getting the downtrend from that perspective. So it's looking really, really good at this point. I'm really happy with the way that it's moving. Volumes are dropping as well, so we're getting really low volumes up here, which is a really good sign. You don't want to be seeing big volume spikes, up at this area, because that means a lot of people are buying back in. The other thing we didn't talk about last time was volume, the volume that we had down here when we had this major spike down. I'll show you that on the weekly chart in a sec. There was just so many things to talk about last time that I forgot to touch on the volume, but the volume is really interesting as well. So just really quickly, all I wanted to show you is the formation. So generally what happens is in a real proper bear market, you get two rallies into you get two rallies after the first sharp drop. You get two rallies which fail that high. So we kind of rally up once, rally up again, fail that high, and then we start dropping again. That's a general, like a proper textbook sort of bear market. So what I tend to do is this first run from this bottom here to this top here, if we just draw a line, I've already drawn it here, that's the line from the low point here to that high. This is the first rally we had just a few weeks ago. If we take that range and we grab it and then we stick it on the exact low point, so where that low came in, that gives us then a price projection. It's a price projection where you should expect a lot of resistance. If the market was to get up into that price area, you'd expect a lot of resistance. Now that price area it just so happens that it coincides with those tops over here, which make it a really very strong area of resistance. I just want to show you quickly on the Dow. There's two times the two major bear markets we've had on the Dow, so 1929 to 1932 and 2007 to 2009. You'll see this exact same formation, albeit it takes, in the Dow, it'll take around 7 months or so to kind of repeat this formation, where Bitcoin tends to repeat these formations very, very quickly, which is good because then we get more trades. We don't have to wait so long for these big sort of trades to come in. But you can see that with this run up we've had just recently, so this is the first move we had, and now this is the second move we've had just here. And you can see that the second move is a lot slower than the first move. The first move is really, really sharp, and this second move is a lot slower. So that's a really, really, really good sign that the market's heading into a bit of a bear market move. And that's our price projection. So what I'm expecting is over the next couple of days is if we come, maybe, I'm not sure, we may come a little bit lower. And then as we get into the 9th, we spike up for a couple of days and try and trick everyone here. So as it breaks through that head and shoulder top, if we try and break through that, we can get a little bit of a false break. But as long as we don't go too much past this high, this resistance for this range here, so as long as we don't go too much past that, we should be good in that green period. If we fail that, I'm expecting it to just fail it. So I think 4,600 is the key area here, 4,600 to 4,650. If we get up in that green period on the 9th, 10th, 11th, we fail it and start dropping, that's going to be the perfect entry. Sell, keep a tight stop loss above that area. Very, very good chance that then we're going to come down and retest this low and even lower than that point. But initially, if we came back to this low, there'd be a very sharp, probably most likely be a very sharp rally, which would be a good opportunity to buy really quickly for a couple of days, and then we should continue lower. I think ultimately we're going to come back to the 2000, probably even below the 1,800 level. Maybe that's going to be a strong support level, but we should definitely come back to 2,000 at some point. Especially if the Dow's going into a bear market after December, then Bitcoin generally follows the Dow most of the time. We don't have too much history on Bitcoin, but when the Dow's going down big time, Bitcoin's always dropping with the Dow. It's never in reverse. I just want to show you a couple of quick situations where it was very similar. This is the big drop we had on the Dow in 1929, the first decline. And you can see once the decline kind of comes to an end, the first kind of rally we have, if I take that line, which I've drawn here, from that low to that high, and then I grab it and project it forward from the next low that it makes, that becomes our resistance sort of point. And you can see the market ran all the way up and it just failed that resistance, literally. But it took this is taking 4 months to do this, whereas Bitcoin has pretty much repeated this in a couple of weeks, so which is pretty good. But see how it fails that high? That shows that there's a lot of weakness there because we can't get past it. And the vibration, the movement of that is very slow. So that second move is very slow. You get the first sharp one, the second one, and then you go into a prolonged bear market. As you can see there, it's a really nice bear market, lasts for 3 years. That's a textbook sort of bear market. And then we kind of repeat the same situation in 2007. I've just got it here. So 2007, we had a really big bull market into 2007. All right, so you can see after we had the final really sharp drop, which is, Bitcoin took 3 days to fall what, the Dow would take a month or so to do it. But the first rally, the first sharp rally, it comes all the way up to if we come all the way up to the 50%, but it's just very sharp, very quick. We take that range there, we stick it on the low, and you can see that's where we're expecting the market to go to on the second move. We fail it, we just get below that point. Again, same as before. It takes a lot longer to get up there as well. So you can see it takes probably, I think it's about a couple of months, whereas that's just a couple of days. And then we go into a prolonged bear market as well. And so back to Bitcoin, it's the same scenario, it's just happening on a very sort of fast sort of time scale, where we have that first run, we're failing that second move. It can't quite get up there at this point, so that's a really, really good sign. And it's forming perfectly at this point. So we've only got a couple of days left until we enter the green period. That's repeating from this high here that's coming in just here. So if we go on the weekly chart really quickly, this is back in 2013. So you can see we had the 3 weeks up from the low, the 1, 2, 3, hit that top there in this green, the next time the green period repeated, and back we came to retest those lows. And if we go forward, just to show you on the weekly time frame, it's the same sort of thing. 1, 2, and this is the 3rd week where the resistance is coming in. So it's everything's working perfectly. The volume as well is interesting. If you go look at back here, this is the biggest volume we had. So I can get that on the chart there. The biggest volume bar we had was on that bottom after that first decline. And then we had that 3-week rally, which we're having right now. And then we came and retested. So this was the biggest volume that we had leading up to that point. And if you go look at where we are now, I'm trying to get this on the camera. You can see the volume down here. This is the biggest volume we had on that big bar. That was the first big bar again, the first big drop on the weekly. That volume is the biggest since back to 215. Now it's not quite as high as the volume back up in 213, but Bitcoin's at $5,000, so it's a lot harder to buy Bitcoin at 5K versus a K. But it is the biggest volume that we've had for a long time. So I'm just trying to show you everything's repeating exactly the same, which is what we want to see for this trade. So it's, that's how we project it forward, that we are going to come and retest this thing. So yeah, anyway, I just thought I'd do a quick update and send it out to you so you can see it forming. It's only a couple of days away, so yeah, just really excited. Hopefully we can get into it and do well. I'll chat to you soon, Matty. Bye.